Imagine this. You receive a letter from the IRS stating your tax return has been flagged for an audit. And the reason? Your Schedule C showed a large net loss, and now the taxman wants you to substantiate your business expenses or else face thousands of dollars in fines and penalties. What do you do? Hi, my name is Jonathan, and I'm a CPA licensed in the state of Florida, and I've had this exact situation happen to many of my clients. I'll share with you the exact template I use to help them in these audits. I'll discuss who should use it, why you should use it, and ultimately, how to use it. And if you stick to the end, you'll also learn how you can use this template for everyday, accurate bookkeeping. So, who should use it? This template is perfect for businesses required to file Schedule C, the most common types being sole proprietorships or single member LLCs. Now, if you're a C Corp, S Corp, partnership, or multi-member LLC, you can still use this template. However, I would highly recommend using an accounting software such as QuickBooks Online, and the reason I recommend it is because these business entities are required to file a different tax return from Schedule C, and depending on the size and nature of the business, they may be required to supply more info to the IRS, such as a balance sheet, at which point it would be easier to use an accounting software versus Excel. But anyways, why do I recommend business owners use this template? Simple. Bank statements. Numbers on an Excel file are meaningless unless they have something concrete to back them up, like bank statements. And my template pulls info from the bank statements and summarizes it on Schedule C, which is exactly what the IRS wants to see in the event of an audit. So, what does this template look like and how do you use it? Well, let me show you.
So here's the template. So I know this looks a little convoluted, but bear with me. I'm going to give you a quick overview. Up here is just some basic info. A lot of it is self-explanatory, like the tax year. So this is like a tax year you're preparing this summary for. Um, Here you just have the name of your bank. If you want to put the account number, you can put the account number to better identify it. And then the account type, like a checking or a credit card. Over here, it's just information you will pull from the bank statement, the statement of the period, so the beginning date of the statement, the ending date of the statement. Over here, again, a lot of it's self-explanatory, beginning cash balance, income, income from the bank statement, money coming into your bank statement, you either put here or here, and then there are formulas already set up to total these numbers. Then you have expenses, so money going out of your bank statement, other outgoing items that aren't business related, you will put here. Again, formulas here to total everything. And then this line calculates your taxable net income or loss, which is what's going to appear on your tax return on your Schedule C specifically. And then here we have the net cash flow, which is really just your beginning balance minus your ending cash balance, how much cash is coming in or how much cash is going out in that particular month. If you are a small business owner just starting out, and you're kind of using your personal account to do your business transactions, this number may not be very accurate because you're mixing personal expenses with business expenses. But this number here should be accurate regardless of whether it's just only a business account or a mix of both a business and a personal account. Ideally, I recommend making sure you get a bank account that's only for business use. But starting out, it may not make sense. You may not be making that much money to want to get your own separate business account. That's fine. But you can use this template for a bank account that's only for business, a bank account that's for both business and personal. It's a very versatile template. And then here it's just your ending cash balance per statement. Um, Anything that's highlighted in this color is usually a field where you would input information. Anything in red is kind of like a check to make sure that everything you're entering is correct. So if you see a number here, you probably didn't enter something correctly. You might want to go back to your statement to double check you entered the numbers correctly. And that's a pretty solid overview. One more thing to mention, if you haven't noticed, a lot of these accounts, the descriptions of these accounts, like gross receipts, advertising, car and truck expense, these accounts and the order in which they're shown match exactly what you would see on Schedule C. So if I go to Schedule C, as you can see here, top first line is gross receipts or sales. Then we have returns and allowances. And then we have the expenses like advertising, car and truck expense, commissions. As you can see, that's all here. Advertising, car and truck expenses, commissions. Exactly word for word, same description of the expense, same description of the income account, same order. So this is pretty much a mirror of Schedule C that you have here. And I recommend keeping the order as it is, try not to change them. And then over here you have other expenses. You can list out the other expenses that weren't listed above this line, like outside services, dues and subscriptions. You can list that all here, add them up, and that will also go on your Schedule C as well. So very versatile template, very easy to read and very easy to match up with Schedule C. So without further ado, let's go through an example here. So this is a bank statement from a client that I worked on back in 2021. This guy was a photographer, just did some freelancing work. I blacked out some of his private information. But this is more or less what a typical bank statement would look like. It's going to have the period of the bank statement up here, transaction detail, a summary of the activity in the account. So everything that we need to put on this template. So just kind of starting from the top, the period, which here is from December 12th, 2020 through January 14th of 2021. So even though we're doing this template, this summary for tax year 2021, we're gonna start with this. Even though this statement starts in 2020, we're still going to use it since it crosses over till 2021. And then later we're going to do an adjustment to fix some of these items, but you see that towards the end. But for now, just start with the statement that contains January 1st or whatever year you're doing this for. And also up here, you see I put the bank name, which is Chase, the account number. This is a personal checking account. The guy mixes personal expenses with business expenses. So I had to tell him to, highlight for me what his business expenses were, which he did over here, which we're going to go through now. We put the beginning date per statement, which was up here, the ending date per statement. And then the beginning cash balance comes from over here. It says 242.58. And then gross receipts or sales. So just focusing on the highlighted items, which is what he said were related to his business. He has these incoming payments. And then anything with the, I know it's kind of hard to see, but I'm gonna zoom in a little bit so you can see it better. Anything with a minus is money leaving our bank account. Anything that's a positive number is money coming in. So going back to here. So pretty much what I did, and there's different ways you can do this. You can just do a formula where you do equal, and then you just put the numbers, 356.4 is what's right here, plus 161, plus 70. You can add up everything onto one line, or you can insert multiple lines and just have the formula that's over here, add them all up. Personally, I like to just put everything onto one line, but people are different. Maybe some people want to see the detail for all their income sources. I just think it's easier if you just put all your incoming sales onto one line. So that's what I did there. And then since this is a mix since this bank account mixes his personal with his business things, it's also important to put what his non-business items were onto the summary so everything reconciles, and you'll see what I mean in a moment. So this guy had a deposit of $6.55 that was not related to his business activity, and we see it right here. Online transfer that was not related. He told me that's not related to his business. So and the reason why we're putting it here again is so that way we can reconcile with the bank statement, and this is what I mean. So this formula is adding up the numbers that we entered. So both the business and the non-business items, it's totaling them right here. So that's our total incoming into our statement. And then in this line, we manually write whatever the total incoming was in this summary, which right here says 593.95. So I will manually type that there. And then this formula subtracts the two numbers. If it's 0, that means we are good. We're not missing any items to enter into our summary. But if, say I forgot to put this 6.55, it'll tell me like, hey, like the total for your bank statement does not match the total that we're adding up here. You're missing something. And then I would go back, I would check to see what I'm missing. And then what I'm missing is the 6.55. So I'll put it there. Now we reconcile. Now moving on to the expense portion. So this guy told me he had only one expense this month. It was he had a meeting with a client, bought some food for him. This is where that item is coming from. It's the $42. So I put that here. He said that was his only business expense, even though he has all these other expenses. He says all of these other expenses are personal, which is fine. So I could either do like a formula here where I would do like equal and then just start adding up everything like 9.15 plus 72, etc. I'm not going to do that. Rather, instead, I'm just going to put what I know for sure are his business items here, put whatever the total outgoing is per the statement, which in this case, it's the sum of these two numbers, the 313 and the 508. And you can see that's what I did in the formula. I did 313 plus 508. That tells me my total outgoing on my bank statement is $821. And then my Excel will calculate the difference between my business expenses and the total outgoing. And then this 779 is the total outgoing for my non-business expenses. So instead of just adding up all my outgoing items, my personal outgoing items, I just put my business expenses. I put whatever the total outgoing is for my statement, and that difference is going to be my total non-business outgoing items. And then I'll just put that here so we reconcile. So it's 779.31. Boom. We're at 0 now, difference. And then this is telling me what my taxable net income or loss is for this month. So what this is doing is it's getting my business revenue, which is up here, minus my business expenses, which is right here. Subtracting the two tells me I made $545 business profit. And then over here, it's saying my net cash flow was a negative $227. That means that compared to my beginning balance, my beginning balance decreased by $227, which eventually led me to an ending balance of $14. But again, since this is like a mix of business and personal items, I would say this is not a helpful metric. I would say if this was just all like business related items, then this would be a more helpful metric, letting you know, like, are you getting more cash into your account versus what's leaving it? But in this case, it's not very helpful. So I wouldn't really focus on that. And at the end of the day, this is the number that's going to show up on your tax return, or rather the total of all the months for the year. This is just 1 month we're looking at. And then lastly, so this formula is calculating based on the inputs I've given it. I'm getting my beginning balance plus my net cash flow. And it's telling me based off of those two numbers, I should have an ending cash balance of $14. I go to my bank statement. I write here my actual ending cash balance per my statement, which is $14. And my difference is 0, which is perfect. That means we entered everything correctly. We're all good, and we can move on to the next month. So here it's the same process. Now we're fully in 2021. So we're just gonna put the dates per our statement: 1/15/21 to 11/21, which is what appears here at the top. And then just as a double check, so this number is coming from down here. It's taking the number that I calculated up here, bringing it over here. I just like to also put in the beginning balance per the statement just to double check and make sure that everything is flowing over correctly, which in this case it does. You see here, that's our beginning balance per statement, the $14.89. Now moving on to the next part, our business income. There's 959, so that's going to be the sum of all these numbers, which you will see in our statement. So it's the sum of this 182, the 60, the 50, 314, and 352. And then deposits not related to our business activity. Again, like you could just, if you wanted to individually put in all these other non-business related deposits, which you see right here. It's only one, right? It says 107, like you see right here. But say you had a bunch of them, instead of rather just adding them all, you would just, you know, put nothing here, and whatever the difference is per the total incoming per your bank statement, which is the number they give us here. The difference between that number and the one that we're calculating is going to be our personal incoming items, which wouldn't be, again, all these personal things, like non-business related things, aren't going to be reported on your tax return. So we do that. Now we go to and look to see what our business expenses were. This guy told me he had only one expense. It was $9 from Walmart. He bought some office supplies for $9.54. I put that there. And then I would just go and put the total outgoing, which is that 228 plus the 484, comes out to 713. The difference between my business expenses and the total outgoing for my statement is 703. Just to save time, instead of just adding everything here, adding all the non-business expenses, I'm just going to put 703. And then my formula is telling me I made about $949 this month for this period. And that's my cash flow for the period. My ending cash per statement was 367, and that agrees to what I'm calculating here on the template. So you would do that for all the months in the year, which I've already done here. I'm not going to go through every single one of these because the process is pretty much the same. I already put everything. I tie my ending cash balance for the year ties with what I'm calculating here. Everything ties. I don't have any numbers anywhere. I have nothing in the red. This column P is our total, our unadjusted total for the year. We do need to make some adjustments for other items, and you'll see what I mean in a moment. Like the most common adjustment you're going to see is the adjustment for meals, because you can only deduct half of the meals that you paid for in a year. So I already have a formula here to automatically calculate that. As you can see here, that's the meals is going to go from 148 to 74, which is half. And that's the number that's going to go on our tax return. And then lastly, we have another major thing that I see like a lot of business owners do, which is they would make a lot of purchases on their credit cards. And so we need to report the business expenses for the purchases that they made on their credit card. But that process is actually a lot easier than this, and I'll show you what I mean right now. Okay, so here is the template for the credit card portion of the summary for business expenses. So as you can see here, the template is very similar to the first one I was showing you earlier for the checking account. So here we're going to have basic info about the account, tax year, bank name, account number, and then this is a credit card. Here we'll put statement date per the credit card statement. And then the difference here now, instead of having beginning cash balance, you're going to have beginning credit card balance. And then here you're going to have payments and credits instead of income, because the credit card is used for payments and expenses, not for, taking in money. So this would be payments and credits, your business expenses. And also, as you can see here, this matches exactly with Schedule C. The name of the accounts, the order of the accounts, that stays all the same. And then, other purchases not related to your business activity. And then here is pretty much your total expenses. I know it says taxable net income loss, but really this is just kind of like your total expenses that you're incurring on the credit card for that month, and then net change in your credit card balance. So let's go through an example here for the first month. So here is the credit card statement for the client. Again, I blacked out his personal info. Here's a summary of the account activity. This is kind of what your typical credit card statement will look like, by the way. You're gonna have a summary of your account activity right here, and then the details of the transactions down here. So just kind of starting from the top, beginning credit card. We're gonna start up here. So we're gonna put the beginning date per statement, which is 12/28/2020. The ending date per statement, which was the 1/27/21. We're putting those two dates right there. Beginning credit card balance. Previous balance was 0, so that's going to be 0. Credit card payments and other credits. You can just put the total that you see here in the account summary. You wouldn't need to really look at the detail all that much, unless maybe you have a refund or something. But even then, I would just put it all in one line. And then now it's just kind of looking at the expenses. So this client told me he had only one business expense, and that was from Walmart for supplies for $26. So we're putting that there, and that's it. We're going to the bottom. And we know that our total purchases per statement was 380. So if I didn't have this here, the difference between the 26 and the 380 is 353. And we know that that's all going to be personal, so I'll just type in 353, and that's it. So you're done with this month. Moving on to the next month. So same thing, starting with the statement date, 121, 128.21 to 27.21. We're putting that over here. Beginning balance was 0. Payments and credits was 269. And then now let's see if we had any business expenses. We do have one. It's from Walmart for $54, and the client told me that this was for supplies. So we're putting that there. Then again, instead of just writing everything out, we just see what the difference is between our business expenses and the total purchases per the statement, which is right here. And that's going to be 214. So we're going to put 214 right there. That's how much money we spent on expenses that month. No change in credit card balance. And that's pretty much the process. You will go through all the months, which I'm not going to do here. to save time. So I went ahead and did all the other months. And then I stopped here at my unadjusted total. So really the numbers that we're kind of looking at are under the expenses group, because payments and credits, that's not something you report on your tax return. You're not going to record your personal purchases. It's just going to be your business expenses that you're focused on here. And let's see, we had $205 in supplies. That seems to have been it. So now we're going to move on to the adjustments portion. So how we do adjustments, there's three major adjustments you're going to make. And we're going to start first with the credit card statement, because then we're going to transfer everything from the credit card statement to our overall checking account uh, summary. So first things first, we're going to remove prior year transactions. What this means is we're going to remove transactions that happened in 2020 from our statements. So if I go back to the credit card statement, we're going to try to see if we find any transactions that happened in 2020 and remove those. All of our payments happen in January of 2021. All of our expenses happen in January 2021. So there's no prior year transactions to remove. Next thing to look at is to remove future year transactions. And what that means is we're going to remove items that happen in the next tax year. So not 2021, but rather 2022. So here we have the statement from 12/28/21, from 1/27/22. So we're going to want to remove any expenses, any transactions from in our Excel from here. So according to the client, he said he had this one business expense on January 7th, 2022 of $36. So we're going to go to our statement. So here we're going to go to our Excel template here. We're going to remove the future year transactions. So even though you don't really need to do this, I just like to do this for consistency. I remove the payments that happened in January. You don't need to do this. That won't affect your tax return or the summary in any way. I just like to do it to be consistent. So I added up pretty much all the payments that were here. The total payments were 267, so I put 267 right there. And then the only expense was this Walmart of $36. I believe you said that was supplies, which it was. So we're going to do a negative 36. The negative is to remove the amount from the unadjusted total rather. So right now our total supplies for the year unadjusted is 205. We want to, and that includes the 36 right now. So we want to remove the 36 because this happened in 2022. And then over here is our adjusted total. And so we're pretty much taking the 205 minus the 36, and that's going to give us 2021 supplies expense of $168. So for this example, those are all the adjustments that need to be made to the credit card template. Again, you didn't need to do this, but I like to do it to be consistent. Put the minus 36. So really the only expense we need to transfer over from our credit card template to our overall bank account template is this 168. So we're going to do that now. So here I put the activity from our credit card onto the summary for our checking account. The checking account is going to be like our consolidated summary for our credit card. And if we have any other bank accounts, we can put it here as well. But for now, it's just this one bank account and this one credit card. So all we had from the credit card was a supplies expense of 168. So I put that here as a positive number to increase our unadjusted total for supplies from 142 to 312. And now we need to look at removing prior year transactions and moving future year transactions. So here I have our bank statement from December 12, 2020 through January 14, 2021. And we want to remove from the bank statement the transactions that happened in December 2020, which I highlighted here in this red box. As you can see, we just had two transactions, two sources of income that came in during that time. So we're going to go here to our Excel summary. We're going to go to where it says remove prior year transactions. And then we're going to simply add these numbers together, make it a negative number. And then when we come over here to our adjusted total, we're going to see that our unadjusted income decreased from about 14,000 to 13,000. And this 500 is the sum of the 356 and the 161. So that's prior year transactions. Now we want to remove future year transactions as well. And so I'm looking at the bank statement from December 14, 2021 through January 13, 2022. So we want to remove all the transactions that happened in January of 2022. And I highlighted those transactions in this red box. As you can see, we had only one business expense that was occurred in January 2022. The client told me that this was just outside services and that it was $22. So we're going to go here to our remove future year transactions. We're going to go to where it says outside services. So here is where we recorded the income. It's part of our unadjusted total. And then we're going to want to remove it by making it a negative number. And then as you can see, outside services becomes $0. And so that completes our Excel summary for our business for tax year 2021. And then the numbers you see here in column U is our adjusted total. These are the figures we would want to report on Schedule C. And again, like what I like about this template is it's organized to mimic what Schedule C looks like. So I'm going to show you what this would look like if we put on Schedule C. So we have gross receipts of 13,000. That 13,000 goes here. And then we're going to have $43 of office expense. That's right here. Next is supplies of $312. After that is deductible meals. And again, remember that we have to do an adjustment. I already have the formula here to automatically adjust meals expense because per law, only half of meals is deductible. So I'm getting that number. I'm dividing that number by 2, making it a negative number. And then there you go. That's half of our meals that's deductible on Schedule C. And that's really the only other adjustment that we make here. Yeah, no other adjustments were made. Now let's see what else we have. And then we had parking and tolls of $28. That's an other expense, so we'll go on the second page. Other expenses, parking and tolls, $28. And then you see it here. Our total expenses will be $457. And then this number right here, this 13,000. As you can see, I have comments in this template. That's just to help you, give you some more information about the accounts and the information these cells. So here I wrote must agree with sensitive profit or loss on Schedule C, page 1, line 29. This is line 29. As we can see here, that says 13,298, which is what we're calculating here, 13,298. And then that's it, your Schedule C is done. So by using these Excel templates, you're not only protecting yourself from IRS audits, but also setting up a clear, consistent bookkeeping system to make smarter, data-driven decisions for your business. And the best part, it costs absolutely nothing, just a little bit of your time. Now, if you move past the early stages and your business is growing, you might be dealing with way more transactions than this template can handle. And that's where QuickBooks Online comes in. I help business owners streamline their QBO. So if you're feeling overwhelmed by receipts, spreadsheets, or just the day-to-day financial work, let's talk. Drop a comment below if you have any questions, and don't forget to like and subscribe for more tips to keep your business running smoothly. See you in the next one.